JSW Cement is finally listed in the stock market. But do you really know the big challenges JSW faces in the industry? How it compares with the Aditya Birla's UltraTech and Adani's Ambuja and ACC? And whether the organic growth strategy is the right strategy for JSW Cement when the industry is seeing massive consolidation. In this video, we will study JSW Cement versus industry leaders. Who has the edge? Is the fifth spot for JSW Cement within reach? Does avoiding acquisitions help or hurt long-term growth of JSW Cement? And finally, is the valuation backed by fundamentals or just future hopes? So stay tuned. What we uncover could shape your views on JSW Cement. So this is the first chart जिसमें top 10 players हैं with their capacity. Now let's look at Aditya Birla's UltraTech. Is 175, MTPA, metric tons per annum. They are making cements. Adani, 102. Then you have Sri Cement. Then we have Dalmia. Then we have Nuvoco Vista. Then we have JK Cement. Then you have Ramco. And this is where your company stands. 20, MTPA. So now in the journey from 20 to, let's say, top 4 or top 5 player is going to be, very long. And if you look at these two players or top, 4 players, they have decades of experience in the cement industry. Whereas, JSW बहुत एक नया player है. Now, other thing, if you look at their balance sheet, Aditya Birla, Adani's, they have a very strong balance sheet, to do M&As. And if you see, most of the M&As have been done by, Adani and, Aditya Birla group. Third, if you look at, these top 2 players, they command, 10 to 15 rupees per bag, premium, because of their brand. And, the other advantage these top players, the top 5 players have, is the institutional and corporate, contract. They manage to get it very easily because they have the price advantage. So if you look at your company, JSW Cement today, they rank, down below. And they have, Ramco, JK, Nuvo, a lot of players ahead of, them. So the journey from 20 to, let's say, to 60 or 40 is going to be, very long. Other thing, the disadvantage they have is the larger player can sustain lower margins, for a longer period of time. I mean, they can absorb, short-term losses to, pressure or eliminate smaller rivals. Second, a pan-India footprint, for UltraTech and ACC Ambuja, it shields them from price volatility in any single region. So JSW is still building its presence in north and center. They are heavily present on the south side. Now this is the the expansion plan of JSW Cement. So let's look at the current capacity. So if you look at FY25, the current capacity is around 20.6 MTPA across 7 locations, and most of their capacity is around their steel plant. Now if you go back to FY26, the next year, expansion to 26. So from 20 to 26 they are planning with the new units in Sambalpur and Nagpur. Now if you go to FY28 and 29, यहाँ पर वो बोल रहे हैं capacity to increase to 41 to 42 MTPA. Okay. And finally, early to mid 2030, they plan to go to 60 million, MTPA. So, they have very ambitious plan, from moving from, let's say, 20 to 60 in a very short 5-6 years period is going to be very challenging. Now, can, JSW Cement really break into the top 5 spot? Well, it's possible, but, far from guaranteed, if you ask me. If they manage to hit 60 million tons and their rivals grow at a slower pace, probably yes. The 5th slot is realistic. But if competitor also they match that growth speed, JSW could still find itself, stuck in the, let's say, 6th or the 7th position in the next 5 years. And if you look at, players which are ahead of JSW Cement, Nuvoco, Vista, JK Cement, Ramco and all, so they are also ramping up their capacity. So in all likelihood, we will see, the rivals also increasing their capacity in the next 5 years. Now, let's look at, some of the big M&A that happened in the cement sector. Now, if you look at Ambuja's ACC, part of Adani, they bought, these two companies. Then again, if you look at Sanghi Cement, acquired by Dalmia, Bharat, which is number 3 or number 4 player. Then if you look at Panna Cement, acquired by Adani, group. If you look at Orient Cement, acquired by Adani. Adani is very aggressive, in the cement sector when it comes to, M&A. Now, if you look at, JSW Cement, it took 9 years, for JSW to move from 70 to 20, a huge, 9-year period. Now, second, JSW ये बोलते रहता है कि हमने deliberately avoid किया M&As because of bidding war or higher prices. But the fact is, in every deal, JSW's name was mentioned. So they were an interested party, but finally deal हुआ नहीं. Second, अगर हम देखें, the argument which they put forward that most of the capacity जो आई up for sale वो साउथ में थी and JSW का अधिकतर capacity साउथ में है. So they think they were not very interested. So they are more interested on the north and the central side. Now current expansion of JSW is largely driven by organic growth. और पार्थ जिंदल ने who is the MD CEO कई बार ये बोला है कि जो capacity वो create कर रहे हैं is less than half the cost per ton compared to this most recent acquisition that has happened in the sector. So cost wise he's saying it's very under control. Now even in the current IPO proceeds 3,600 crore will partly fund entry into north Nagpur, Rajasthan, and expansion in the east Sambalpur and Odisha and all. So it's a fact JSW Cement is not very aggressive. Now let's look at the valuation of JSW Cement vis-a-vis the other player. Now, if you look at UltraTech, Ambuja, Dalmia, Sri and JSW, so the PE is 52 for UltraTech, 32 for Ambuja, 45 for Dalmia, 73 for Cement and 240 for JSW Cement. So the kind of PE they are getting, it looks like highly overvalued. Now let's look at the return on equity. At 52, it's around close to 10%. It's around 8%. 4, 5, and it's negative. 5.81 for JSW. So the high PE doesn't justify. If you look at the ROE. Now, if you look at the ROCE, return on capital employed, 10, 10, 5, 6, and it's 4. So all these performance parameter on ROC and ROE, JSW is at the bottom. If you compare with the top 4. Players. Now, if one look at the book value comparison, which is not there in the chart, JSW's price to book comes out to be around close to 3x. Now, this is in line with or lower than peers like Ambuja and Dalmia, suggesting that asset-based valuation is not excessive. Now, if a company is in a turnaround phase or early in its life cycle like JSW Cement, and earnings are not yet normalized, price to book offers an alternative valuation anchor. So let's say older companies like UltraTech and ACC Ambuja may show artificially low book value due to depreciation and all, making their price to book looks inflated. So that can be the reason for better price to book for JSW Cement. Now, a fair price to book is only meaningful when linked with strong return on equity and capital. Now, JSW, as we have seen, has a negative ROE, meaning even if it's 2.4 price to book isn't inherently, so JSW has a negative ROE, meaning even if it's 2.4x PB isn't inherently justified without earning support. So this valuation comparison I have given only for educational purposes. This is not an advice, and if you are planning to buy, sell, hold, do consult your financial advisor. So as you can see, JSW is following a purely organic growth strategy. They are not at all aggressive on the M&A side. Parth Jindal's father, or the chairman, Sajjan Jindal, has often said that they should be aggressive in the market, if they want to compete with the big players.
Hey everyone, only 1 in 10 viewers actually subscribes to our channel. If you're part of the 90%, change that today. Help us grow and hit the subscribe button.